Hey everybody, what's going on? It's James here with Crypto Common Sense, and I have your Bitcoin/cryptocurrency market update for Sunday, September the 20th, 21st UK time. So before I jump into the content for this video, please do me a huge favor, hit that thumbs up button, subscribe to the channel, and if you have not already, make sure you check the link in the description. You can join the Patreon for just $7 a month to help support the channel and get access to more frequent updates. You can also join my trading course. I had planned on increasing the price last week, but I got sidetracked on some programming stuff I was working on and have not changed the landing pages or anything. So for right now, it's still $297 a year. So if you'd like to learn how to trade, check it out. Let's talk about Bitcoin, and I have actually looked at the charts a little bit today. I stayed up super late and ended up going to bed about 10 o'clock my time this morning, and I ran out of steam. I was waiting on a trade to come in. Waited. Finally said, well, I've got to get some sleep. So I went to bed and woke up, and of course my setup came in. I was very frustrated when I woke up. So we'll talk about that. I'll show you what I was waiting for so that you can also put it in your bag of tricks for the future. It was a really easy trade to take, and we'll go through the charts. We'll take a look at the stock market, and we'll just kind of look at this big picture stuff today. So first things first, let me just start off with a trade because I feel like a lot of people overcomplicate this. I was on Twitter this morning for a few minutes, and when I was on there, it was funny because I was waiting for a long, and I was, like I said, I was just waiting, and I actually took out a long on this tail because I thought it might have front ran this moving average, which I'll talk about here in just a second, and then I put a trailing stop loss on it. But what I was really waiting for was a touch of this 50 moving average in the 4-hour chart. And the reason that I was so excited about that and so interested in taking a long position is because not only was the 50 moving average down there, but that 50 moving average was lining up perfectly with the upward sloping trend line on the 4-hour chart. So I did take a long in this tail, like I said. And then what happened was I put a trailing stop loss on it. I was trying to stay awake so that I could, if it did come down and touch it, that I could double my position and then move the stop loss down. But like I said, I ran out of steam. I was literally falling asleep at my desk. I guess age is catching up with me. So I went to bed. Unfortunately for me, when I woke up, here's the trade. When I woke up, this had moved up to here, and I had a $50 stop loss. So then when it pulled back, I got stopped out for, it was a 0.08% loss. So basically the fees. So it's pretty close to break-even trade, but I was super bummed out because it went down. Here's the green line that I was watching for, and had I been awake, what I could have done is I could have moved the stop loss, which I'm not going to go into super detail about stop losses, but there are times where it makes sense to move them. Didn't happen. I got stopped out for a tiny little loss, and I missed my long. But the lesson for you is keep an eye on the 50 moving average and the 200 moving average for the 4-hour time frame, right? It's really powerful on the daily time frame, but it's also really powerful on the 4-hour. And one of the things that I always tell my students is you want to try to find more than one reason for a trade. So for example, just a moving average by itself might not be enough reason to take a trade. But if you have a moving average that's also lining up with resistance, for example, or in this case support, that's two separate reasons that price might find support there, and you might get some type of bounce. And if somebody had long this, it was a really easy long to take, right? And price moved up off the line there, moved up about 1.8 to 1.9% on a day trade. That's a fantastic ROI, right? So put this in your bag of tricks. This one was really weird. I don't think I've ever seen a moving average move along a trend line that perfectly. Now I've seen them where they cross each other and price comes down and hits them at the same time, but I don't think I've ever seen one where it just literally just followed it. It's like a yellow brick road there, right? It's right along that thing. So what this is actually called, it's actually called a far from moving average trade. And I'm not going to get too deep into setups and things like that, but anytime you have price really far away from a moving average and then coming down pretty violently toward that moving average, it's a really good probability that you're going to get a bounce. So for example, if this had been resistance, if we flip it upside down, right? If it had been resistance, same thing. If you're coming up, from far away, you're coming up, you slam into it, this would have been a place where I was looking to short Bitcoin. But in this case, of course, it's coming down. So this was a place where I would have wanted to long Bitcoin. And when I say long it, it's a 4-hour time frame. So I don't mean long it, hey, I'm going to go for the moon or $12,000. No, this is the type of thing where what I would have been looking for is I would have been looking for a bounce toward the 200 moving average. So the trade itself would have looked something like this, just to give you an idea. So if I entered, turn this off. If I entered on the touch, I would have set, 0.5% stop loss, because if you lose it by 0.5%, chances are it's probably going to go down to the next level, which in this case probably would have been down around 10.5. And then you got a 1% profit target. So basically it looks something like this. And then once your profit target is hit, and there's lots of different ways to do this, but once your profit target is hit, usually what I would do is I would pull my stop loss to break even, and then I would put a trailing stop on it and just ride it up as far as it goes until it pulls back. Usually my trailing stops are like $50 to $100 depending on the trade. And then like this morning, for example, I put a trailing stop on this because I was going to bed. So I didn't know what would happen while I was sleeping, and it's just a bummer that it got hit, because if it hadn't been hit, like I said, I could have cost averaged in and moved some things around, but that's life. But yeah, there you go. There's a setup that you can take and put in your bag of tricks, like I said, and then in the future, you can watch this stuff, and when it does come to a moving average, you can decide whether or not you want to short or long it. So for example, over here, this came up and touched this as resistance, but this one would not have been as easy to short because there was no trend line there, right? That would have just been one reason. You would have had to find another reason to back that up if you wanted to be a little bit more conservative. So that's kind of what I saw in the 4 hour. So let's jump over, and instead of talking about trading specifically, let's talk about charts, kind of an analysis, if you will. So this is the CME chart, the futures chart, of course. Same old stuff. This is that old double top that we were watching for. We got the bearish retest and move down. Now we have this head and shoulders pattern with this neckline. Of course, you guys know that I've been waiting for the retest of the neckline so that I could go short. I was very frustrated over the weekend. I had a short that was sitting at 11.2K. It did not get filled. What happened was price pumped up, and it actually stopped at 11,179 on Coinbase, and it was a little bit less than that over on Bybit. I think it was like 11,160 it stopped at. So my 11.2 short did not fill. This 50-day moving average got front ran. I was very, very frustrated by that. But it does look like a bearish retest. I do expect that this is probably going to be coming down from here. And this little bounce that we're getting right here, I don't think it's a trend continuation where it's going to suddenly pick up the uptrend again. I think it's more likely that it's probably going to, I'm hoping that it bounces up maybe to 11.2, 11.3, somewhere in this ballpark, and then kind of double tops here and then comes back down. So we'll kind of see how that goes. I am short on Bitcoin right now, just a full disclosure. I always like to kind of share that stuff because obviously, I'm going to be a little biased when I'm short, but I'm not short because I think it's done. I'm still rooting for a bounce, right? I'm still rooting for a bounce up to 11.2 so that I can open a bigger position and kind of cost average the position and then ride it down. But if it doesn't get there, then I'll just ride the short that I have down, and that's okay too. I really don't care, guys, whether this thing goes up or down anymore. I have absolutely it doesn't make any difference to me. I'm just trading it, long, short, long, short, long, short. And like today, I took that long this morning, but, then I took a short when I got up, right? So I don't care. I just go wherever the wind blows. But this looks like a bearish retest, and I do expect more downside from this, okay? The thing is what it did right here with this gap, this didn't surprise me. One of the reasons that I was bullish back here, whereas a lot of people were bearish, because this market likes to set traps. It loves to make the average person think one thing and then do the opposite. So when it came down here, a lot of people were calling for 9.6K, because they wanted this gap to fill, right? And I was long back here, or looking, I don't know if I was long there. I should be careful about saying it, how I word that. I was looking for longs, looking for a bounce. I don't know exactly what trades I took back there. I've traded 20 times in the last 10 days. But essentially, this is the same thing that it did back last year. If you go back, look at this. You guys remember this $8,500 gap? It came down right here, right? And this actually did get me last year. When it came down here, I remember being short and not closing the short, right? Because I shorted it back here. I didn't close the short because I thought it was going to fill in the gap, and then it bounced on me, and I ended up closing it on the bounce instead, which was still a good trade, but not near as good as it would have been, right? And then it came down again, so another bear trap here. It had the big pump, washed a lot of people out, and it basically ground sideways before it finally filled in that gap. So the CME loves to do this stuff. They love to bring it down right to the top of the gap and then bounce before it finally gets filled in, okay? So yeah, I think that we probably will fill this gap in. I think we'll probably fill it in the next couple of weeks, and that's kind of what I'm thinking, and this is why. You get the head and shoulders, you have the bounce back up toward the support, flipped resistance, and of course that move is also toward the 61.8 Fibonacci level, which is right around 11.3 on the CME, right? So yeah, if we get a pump to 11 to 11.3, I'll add to my short position and feel good about it. Let's take a look at a weekly Bitcoin chart. This is a spot Bitcoin chart. So of course we did have the the two tails that came down through this 19-week moving average. That was another reason that I was expecting this bounce. We got the bounce, and really this chart just looks like, it just looks like a dead cat bounce. That's all it looks like to me, right? So not a whole lot to talk about there. I think the major level, this thing does move down. I think the major level to keep an eye on is going to be down around 7,800. It may get temporary support on like the 200-day moving average or the 280-day moving average. There may be some places where it kind of stutters, steps along the way, gets a little bounce or whatever. But I think ultimately this thing is going back to 7,800 minimum. Okay, and that's not necessarily my end game or end target. It's just that's the level that I'm going to be really interested in keeping an eye on, is at 7,800 level. And then if we lose it, start reevaluating and looking for things down around the golden pocket around 71.54, right? If we lose, and by the way, the reason 7,800 is important is because there's a gap down there, which I'll talk about on the daily, right? And then I just play it level by level. I do think I'm very, confident that we will get back down to 5,500 and possibly even lower. I'm not as confident that we'll take out this low back here, but even if this is a bull market, I have a feeling that we probably will take out the 5,500 because there's still liquidity gaps down there. Okay, so that's kind of the weekly chart. The 3-day chart looks super bearish to me, really. We got this bounce off of this downward sloping trend line. It bounced up toward the top of the bear market box. It did peak outside of it, but the volume is really, really low, so that doesn't look like a confirmed breakout to me. And then this last candle, which just closed, a little over an hour or so ago, it did close technically on top of it. So it could be, and you got to be aware of this, it could be that this is actually like a bullish retest, and that it really is going to go up from here and take all this stuff out. You could end up getting some type of trend line that ends up looking something like this, where this let's get this where this ends up going all the way back here, puts in like a big bearish divergence, and then comes back down to there, and this does something like this, right? So you've got to be aware of the possibilities, and don't blindly go into this and be like, okay, well, it's definitely going down. No, I think it's going down, but maybe not, right? Maybe not. This candle here is basically what's called a spinning top. It's a sign of indecision. Basically, emotionally speaking, the bulls and the bears were evenly matched. No one really knew what to do, and so you get this spinning top candle. More often than not, it's a reversal signal in my experience, and it's a sign that the market is getting ready to turn the corner and go back down, right? Kind of like these tweezer bottoms back here, right? And again, they're not perfect tweezer bottoms, but good enough for me. It was one of the reasons that I was bullish, looking for the 11.2K bounce, right? You get the spinning top right here, and then the move up. Now you got a spinning top right here, and I suspect we'll get a move down. On the daily chart, like I said, I still have short sitting up around 11.2. One of the reasons I like that level so much, like I mentioned earlier, is indeed because of the Fibonacci levels. So if I draw some Fib retracements on here, the 61.8 is 11,220, right? but you also have that 50-day moving average at 11,242. So I would love to see that bounce up there, right? Of course, we have the head and shoulders that we already talked about in the CME, and then we also have that cup and handle formation that I do not trade, but that some people on Twitter are pointing out, and it is legit, right? Here's your cup, here's your handle. You typically get a pullback to around the 61.8, and then you just measure it from the top here to the bottom here, and that's your move, right? Your target, if you will. So in this case, if you measure that, it's about $2,673, and then if you pull that over, say it gets up to the 50-day moving average, it would give a breakdown target of around 85.65, right? So it would look like this, and not necessarily straight down. I mean, you know, you'll get bounces and all that kind of crap, right? So I'm bearish. I'm just bearish. There's no, you know, hiding the fact that I am indeed bearish. This is one of the most clean, you know, setups that I've seen in a long time, as far as having that cup and handle, as far as having that head and shoulders, as far as having that 50-day moving average, as far as having that 61.8. It's so many things, you know. Like in the beginning of the video, I said more than one reason for a trade. Well, you got 3 or 4 different reasons here that a person might want to go short. I'm not telling you to go short. I'm saying that's the reason that I'm looking for short positions, right? That's where my mind is at with that. And of course, like I said, you know, the 200 moving average is down around $9,200. So it could be that, you know, it finds support down there, get some kind of dead cat bounce off of it if it moves down there. But ultimately, I do suspect that we will fill in this gap around 7,800, and I do think we'll eventually come down and fill in this gap down around 5,500 as well. Okay. From an RSI standpoint, I don't really see anything that makes me lean bearish or bullish. It's just, you know, kind of no man's land right now. So no clean lines that I'm watching per se or anything. There is this line here, but again, I talked about this a few days ago. I feel like it's a cherry-picked line. I don't think it means that much, but we'll see, right? Maybe this is putting in a head and shoulders down here. I don't know. Yeah, there's no line that I feel good enough that I want to, you know, take a position on. But, you know, remember, when you have a dump and you break support and then you have a low volume rally toward, you know, support as resistance like we did through here, that's not normally a real move. That's normally a sign of distribution, right? And then you get your next leg down. Okay, so we suddenly get a big green, you know, volume bar down here. It could mean that, you know, we're actually going to take out this high back here, and then I'd have to reevaluate the situation, right? So that's what I'm seeing on Bitcoin. Not going to talk about alts today. Haven't looked at them in quite some time, and the video is already almost 18 minutes long. So I do want to briefly talk about stocks. I have not looked at the stock market since Friday, so I don't know how it looks. Let's take a look. Okay, well, wow. That's a left shoulder, that's a head, and that's a right shoulder. And I'm not going to put volume on this particular chart, which sucks because I need volume to confirm that, right? I need to see that the buying volume on the head is less than the buying volume on the left shoulder. But not having volume and just looking at a chart pattern, this does look like a head and shoulders pattern, right? And this is a daily Dow chart. I wonder if I put the Dow, the real Dow, not the US 30 on here. Will it give me volume on that? No, I got to go over to Thinkorswim, which I'm not going to do in this video. But yeah, that, wow. Again, I don't have volume, so I can't say for sure, but it definitely looks like a head and shoulders. And I believe that cryptocurrency has tied itself to the US stock market. So if the stock starts crashing, yeah, I'm looking for crypto to go with it, right? The neck on that thing will be around 1,700 or so. So if it did break it, that'd be down around like 25. Its 200 moving average is around 26.3. Yeah, okay. The 50 moving average, look at this. This is the 50-day moving average on the Dow. Perfect touch. And just like with Bitcoin, it does tend to be a line of support, as you can see here. But look at this. It's been tested 1 time, 2 times, 3 times, 4 times, 5 times, 6 times. How many times do you want to test a line of support, right? The more times the line is tested, the weaker it gets, right? It's, if you think of it like a concrete wall and you got somebody hitting it with a sledgehammer, eventually that wall is going to collapse. So to me, it looks like this move is coming to an end. Let's look at the US 30 again, which again is just the symbol for the Dow Jones 30. Had the W on RSI, but it failed. Man, I really wish I had some volume on this trading view chart. Okay, I don't. That's life. All right. Yeah, it looks pretty bearish. Let's look at the Nasdaq and see what the Nasdaq looks like. This one looks far worse. I don't really consider this a head and shoulders. I mean, I guess somebody might say, oh yeah, there's your left shoulder, your head and your right shoulder. Maybe. But I do view this 50-day moving average as support that's giving way. So that looks sketchy, right? So you got the Dow looking rough, you got the Nasdaq looking rough. How's the US 500 look? Let's get rid of all the drawings and just look at this thing with a fresh pair of eyes. So this is the daily chart, and it also lost its 50-day moving average. So yeah, stock market, it looks like doo-doo, right? It looks really bad. It could potentially end up being something like this, where it ends up looking like a double bottom coming back up. So be mindful of that. If this breaks back above the 50-day moving average, we might be in the middle of a double bobble. What's a bobble? A double bottom forming. So you want to be aware of that. But to me, it looks a whole lot more like this is going to do something like this. Okay. So again, I believe that cryptocurrency has tied itself to the U.S. stock market. As such, if the stock market has a red week, I believe Bitcoin will have a red week as well. All right. So for me, the ideal situation this week will be that this thing does pump up, that it does tag its 50 moving average on the daily, that I'm able to get into a very nice short position, and then everything falls from there. That's kind of the ideal situation for me. Okay. Yeah, a pretty good video. It's a little over 20 minutes long. Hope you guys enjoyed it. I think I'll wrap up there. Hopefully that little trade lesson at the beginning of the video does something for you. Hopefully you're able to take that in the future and it benefits you in some way. I will tell you that I've personally made a lot of money with that particular type of trade, that far from moving average trade, over the last 3 or so years. And I will tell you that it works in the stock market, cryptocurrency, and precious metals. Probably works in Forex as well, but I don't trade Forex, although it is something I'm going to start doing probably this month or next month, depending on how quickly I get to it. So yeah, thought I'd share that with you guys. All right, this is James. Hope you guys enjoyed it. Like I said, please remember, I am just some guy sitting in a spare bedroom, so nothing in the video is financial advice. Nothing in the video is trade advice. You should always do your own due diligence and seek out professional investment advice from a licensed financial advisor, which I am not, before making any type of investment in cryptocurrency, the stock market, or precious metals. If you haven't already, please be sure and give the video a thumbs up. Make sure you subscribe to the channel. And again, you can check the description for links to Patreon to support the channel. And you can also join my trading course to learn all of my setups as well as technical analysis. The link will be down there. This is James with Crypto Common Sense, reminding you to please trade safe.